All right, we're going to round two on this recording because it's a pain in my ass. And when you're trying to run things by yourself and trying to sell stuff, it just doesn't, it's not awesome, guys. But I want to get the information out to you because one, it makes it easier for me to convey data. And also, it's kind of the thing that everybody wants to do today is just spout off shit into a camera. So that's what we're doing, spouting off shit to the camera. But hopefully it's of value to you. And I'm not just giving you stuff that's of zero use. But let me start off with this. You missed yesterday. I did not get recording done on Tuesday, which I intend to because Monday morning, very early, I had to be up, out the door, get my workout in, at 4 o'clock in the morning, so I could be in the Uber. Got my buddy Trevor who takes care of me, got me to the airport. From there to Salt Lake. Salt Lake, why? Because I have 88 of these specifically stamped. Let me see if you can see the stamp. I'm trying to show it to you. It's right down here. It's embossed stamp. Hard to see. It says Redneck Economics. Has a chainsaw on it with a number and a blank of 88 exclusive. So it's Redneck Economics exclusive 88 copies that are signed by myself, as you can see right there. This one's number 8 of 88. I'm keeping that one. That one's mine. The other signature on here, Robert, that's what I had to go to Utah for. I had to pack 88 of these puppies in luggage, 140 pounds of luggage. And yeah, I got charged. It cost me a few bucks, not only the flight to go out there, but also extra for the luggage. Because even though I'm an executive platinum, I get 70 pounds per bag. I end up having 69 pounds on one bag and 78 pounds on the other, where I pay an extra 200 bucks each direction for that extra 8 pounds. Now, got a signature from Eric, the illustrator. And finally, we got a signature from Dolph DeRoos, who wrote the afterword. So you've got all 4 signatures stamped and numbered. These 88, 85 of them go out to anybody who does a 5-star review on Amazon. So you got to go to your Amazon if you've got the book. And I have sent a lot of you books. When you close on a loan, you'll get one through Amazon, so you can use that as a verified purchase to go in and fill out your 5-star review. 5 stars, identify yourself, make sure I know, because some of you guys have code names for your Amazon username, and I have no idea who you are. I've identified 28 so far. If you've got one on there, make sure you alert me that it's yours, right? And you may be alerting somebody else's, maybe not, but make sure you alert me because I want to get you one of these. I want to thank those who have taken the time to put out some information here. I love your guys' reviews. There's really, really freaking cool stuff. So just know I appreciate that, and I do not take it lightly whatsoever. So let's talk about why we're here. We're here to talk about rates. I keep getting that question, right? What's the rate? Everybody asks, what's the rate? Because you've been programmed to ask what the rate. What is going on with the market? What are the banks charging for interest rates? Guys, it's not what the banks are charging. It's what's going on in the mortgage-backed securities. And what's driving the mortgage-backed securities? Well, inflation really is what's moving that. Jobs are going to tell us about inflation. Other things are happening. It's been about the oil. It's been energy prices driving inflation lately. So let's go back last week. Friday I gave you an update. Thursday, basically nothing was really happening. Inflation pressures were easing. Mortgage-backed securities were doing okay. They're improved. We get to Monday, almost nothing happened because there was very, very similar air in the market. So they kind of sat to wait for the next bit of information. What happens on Tuesday? Oil prices jump. Why? More concerns over in Iran, Straits of Hormuz, going to be pushing up oil prices. What happens with energy prices? Energy prices go up, have inflation concerns. Inflation concerns happen, then what does that do? If you're a person putting your money someplace, that's going to get a flat rate of return. Inflation goes up, the dollar value declines as far as the dollar's buying power, which we know it's happening. That person saying, I'm going to want more money then if I am going to be pushed into a situation where the dollar's value is not going to spend as well. So I want to get a better return. So investors demand return increases, mortgage-backed securities fall, Treasury yields rise, mortgage interest rates move higher. That's what happened. Now remember, when you lock your mortgage, you're entering into the other side of the trade. The investor is buying your payment, or the trader is buying your payment, the bond trader, and they're securing it with your promise to pay. You're buying control. And what are you buying? Control of an amortizing, appreciating, income-producing asset. They're not the same trade. They're getting a flat rate of return that's declining. You're getting all these other things. So think about that for a minute. The market's not deciding whether your rate should be 6.5 or 6.75. It's deciding whether or not the people who are putting money in want more money because of what's going on with inflation, oil, economic growth, Federal Reserve policy, global events. That's what's moving mortgage-backed securities, not us as a bank deciding your interest rate. Stop asking what the rate is. Start asking, what does this capital allow me to control? Because you're buying an asset. Remember, when you tell yourself that you're going into and you're going into rate shopper mode, you need to tell yourself something. When you start thinking, man, I got to go find a better rate, change your mind. You need to think, Wall Street is buying a stream of eroding payments. I'm buying control of an asset. And what does that asset do? It amortizes because somebody else is paying off the mortgage. You're putting 20% down, you're making more than 10% on your money just by somebody paying off the loan. If it's appreciating at least 2.5% per year, 2 to 2.5, you're making another 10%. You're already at 20% before a single dollar of cash flow comes in. Then you get to increase your rents because we're living in an inflationary environment. You also get the tax benefits. You've got to set up your structure right. We need to help you with that. So if you're not sure about your structure for that, talk to us. We'll connect you with the right people. That's how a smart ass real estate investor must think. You got to get that right. So that's red economics. That's understanding the system. You got to use the system. You got to quit jerking off and start making the trade. So let's look at the bonds and see where that puts us today. We got to take a look at mortgage-backed securities. Let's go ahead and get a little share screen going on so you can see what's happened and what is our secure points. So here we are right now. Look at this. We got hit pretty hard right there with the straights. I've got to try and get this where you can see it better. Try and move my cursor around. It's not doing awesome here. There we go. Okay, so we're at our peak literally just a few trading days ago. We've taken these beatings because of what's going on in MBSs. Then you get in here, straights, right? It mirrors what happened back here. It was peaking out. Look at that hammer pattern way up here. Man, my mouse just sucks right now, and I'm trying not to get pissed about it, but there we go. Right there. See that hammer pattern up there, peaked out? We have the same thing that happened right here when we had the bombing happen again. Or we have, wow, my mouse is just crap. I'm sorry, guys. But right here, look at that. So it did it again, and we had this fall. That all has to do with what's going on with potentially energy prices. So that being the situation, we've got also this area here at the bottom of our candle right there. I can get this thing to work. I wonder if my battery's dying. It's probably what it is. So we got this support right here. We may hit that and bounce off of it again as we did before. So right now we're in a spot that we may or may not want to be in the lock mode, but it might be beneficial if you're making cash flow. It's paying for itself. You don't feel bad about where it is. Pull the trigger because we have no idea what's going to happen. Everything out there is driving this stuff, not us, not things within a lot of things within our economy, but a lot of it's being manipulated by what's going on externally. So look at your deal. Can it take care of itself? We'll talk a little bit more about what's driving the interest rate. A lot of times, since we're doing DSCR, you're not seeing a lot of movement. Take advantage of it, get in the trade, take somebody else's money and get all those benefits while they're losing out because of what inflation is going to do, and it's going to keep doing it. Appreciate you guys. I'll talk to you on Friday.